Good evening, good evening, good evening. Welcome to Navigating Now. It's your girl, Jocelyn Harrison, and thank you for being here with me tonight. I am so excited, as I always am, about the topic and my guest tonight. Tonight, we will be talking navigating credit restoration. Look, I'm gonna tell you, this is gonna be good because my guest is Chanay Robinson, CEO and founder of the Professional Credit Diva. Let me tell you about Chanay. First of all, she is a native of Baltimore, Maryland, and her company assists focused individuals, couples, and business professionals achieve excellent credit so that they never have to worry about being denied for anything ever again. But let me say that again. They never have to worry about being denied for anything ever again. They're able to purchase their dream car, their dream home, or even start that dream business. Now, if this sounds like you, this sounds like information you want, information you need, definitely stay tuned. Go get your friends, go get your family, go get your kids even. Watch this broadcast and share it with your people. Chanay is funny. She is a straight talker, which I love. And she has just incredible experience in this area. She is definitely an expert at helping people restore and build their credit. So join me in welcoming my girl, Chanay Robinson. Now, what's up? Welcome, Chanay.
Hello, beautiful. Thank you for sharing your platform with me. Thank you for inviting me. I am so excited to be here with you.
Well, let's dig into this. Okay, now, so let me just say this. It takes a lot for a person to call themselves the professional credit diva. How did that name come about? How did you even start in this field?
So, let me give you a little bit of history. I am a true entrepreneur at heart. And so I have always been an administrative assistant in the corporate world. So I did it in the medical field, I did it in finances, I did it in education, I did it in the legal field. I was always an executive administrative assistant, and I loved it because it gave me. A great opportunity to see how budgeting works, how planning works, to be responsible. And I tell everyone, if you are a parent and you have, a household to run, you're an administrative assistant anyway. So why not go and get paid for it? And so with that being said, I started my first company, which was the Professional Diva. Because for me, diva means doing it very aggressively. No matter what it is you want in life, you have to go after it. You have to go get that thing because nobody is going to give it to you. And so I love the name, the Professional Diva. And so that was the name of my virtual assistant company because I'm a diva, but I'm gonna be professional about it. You don't have to worry. I'm gonna handle you very, professionally and everything else. So professional was very important to be in my title. And so a lot of times, as a diva, you can get classified negatively. Oh, she's a drama queen, she's a diva. But like I said, for me, diva means doing it very aggressively. And so growing up, I didn't see like a lot of business owners or anything in my family, in my community, and we didn't really talk about finances. As one of my great mentors taught me, she said, everything comes with instructions except that paycheck. They give you that paycheck every week, every 2 weeks, monthly, bi-monthly, but they don't give you any instructions with it. A toaster comes with instructions. A television, a microwave, an ottoman comes with instructions. Everything comes with instructions except for that paycheck. And so once I got out into the real world and I was making it, I was spending money all willy-nilly because I worked in a lot of excellent fields. And so growing up, we didn't talk about finances, and I did not realize how important credit was, especially making good money. I was like, well, I can afford to pay it. I can do this. I don't need credit or anything like that, because in my household and a lot of other households, we were taught not to carry a bill. If you can afford to pay for it, go ahead and get it. And if you can't afford to pay cash for it, then you probably don't need it. But you don't need, that debt hanging over your head unless it's something, such as a vehicle or home. If it's not a vehicle or a home, you don't need to purchase it. You sure don't need to put clothes on a credit card or anything like that, right? And so I wasn't really aware of the fact that credit would play such a major role in my adult life, growing up or anything. And so I got into trouble once I got approved for things and said, okay, well, they're going to give me $250. I was balling, but I didn't realize the finance rates, the interest rates, or, things like that. I'm thinking, okay, as long as I pay it back $10 or $15 or whatever, then I was good. Even if I maxed out the card, but as long as I paid that $10 or $15 that was due a month, I was good. I had no idea that I was actually doing more harm for a pair of Jordache jeans than was really, really necessary, right? And so getting into trouble and financing cars and things like that, I had to always put a down payment. I didn't really understand that if I had taken care of my credit, I would not have to put down a down payment or anything like that, because credit would take care of that. And so once I got to the point where, as though I got sick and tired of being sick and tired of, trying to finance something or find a girlfriend, to put my apartment in, or, to get this car for me, I said, you know what, Chanay, you have to really grow up and take responsibility for your actions. You have to buckle down. And so we always think that if we pay off old debt on our credit report, then it's going to help to raise our score. I learned that the hard way, that that's not what it does, right? But once I decided to take the bull by the horns, take responsibilities for the things that I had done in the past, I learned that I could actually repair my credit. And there are companies out there, that repair your credit, whereas though you don't have to wait for something to fall off for 7 years or 10 years, and then your score is going to go up. You can actually take charge and do something, immediately. You don't have to wait for the credit reporting agencies to do their part, because sometimes they just don't. It's a company and they fall behind. And so once I found that out, and I signed with, I actually signed with two companies. I signed with a big company that's like a MLM company. And then I signed with a local company in Maryland. And so once I realized, and I started getting like some results on Facebook, there were a lot of credit repair groups. So, with me now taking a true interest in fixing my credit and finding out how credit works, I started joining the different groups to find out, tricks of the trades, things they were doing, and everything else. And once I realized in those groups that the average person could start their own credit repair company, it piqued the interest in me, because I honestly did not know that the average individual could start their own credit repair company. And so once I joined, the other groups for the credit repair owners and things like that, I said to myself, well, let me try, because there was a trial for a credit repair company, a database that teaches you how to set up your company, what you need to do, the letters you need to send, and it provided the database for you, the contracts, all of the legal, everything. And so they had a 30-day free trial. So I said, well, let me take advantage of the trial to see, what's happening, what's going on, what it all entails. And so I used me, my dad, and my other half, I used us as my guinea pigs. And once I got the results that I got, especially for my dad first, I was like, oh my goodness. So I was able to take his score. I want to say he was like in the low to mid fives. And I took him to like a 794. And I was like, well, hallelujah. And he was able to get, approved for an $11,000 credit card and things like that, things that he had never experienced growing up as well. And so once I saw the growth, and I saw the positive, and I saw the look that it put on my dad's face once we got him approved and everything, and that 700 plus credit score, appeared across the screen. It just did something to me. And I said, well, this is what I want to do. I want people in my company, people that come in contact with me, when they leave me, I want them to have this feeling, to have this look. And so that's when I pursued it full time. Well, not full time because I was still working part time, but that's when I decided that, I was going to legitimize this business, legitimize myself, and become the professional credit diva. Because I'm still a professional diva, but now I deal with credit also. So that's how the professional credit diva came into play. That's how she was birthed.
I love it. I love it. I love it. And I know you've been doing it for several years now. You've helped a massive amount of people with their credit, increase their credit scores and build credit. So let's start at the basics. What does it mean to have good credit? What does that even mean?
So to have good credit summed up means that you are able to do the things that you have to do, the things that you need to do, and also the things that you want to do. And so with good credit, however, comes great responsibility, because fixing your credit or having your credit, it's not just a one-time thing. It's a lifestyle. Okay. It's how you have to live. It's a mindset. It's how you have to think. And so the reason why folks that have good credit, excellent credit, exceptional credit, the reason why they get the benefits that they have is because they understand the importance and the responsibility that comes with maintaining that level of credit worthiness. So the creditors are not afraid to take a chance on them with giving them large amounts of things on credit. And a lot of times when you have excellent to exceptional credit, you don't even have to show proof of funds. You don't have to show proof of income. You don't have to do anything, because your credit score speaks for you. It speaks volumes. When you have good to excellent to exceptional credit, you are in control. You determine the terms that you want to pay, what you will accept and what you won't accept.
Okay, hold on. Put a pin right there. Okay, did y'all hear what she said? First of all, having good credit means you get to have you get to do the things you have to do, that you need to do, and more importantly, that you want to do.
That's it.
And that it is a lifestyle and a mindset, which I'm sure we'll get into a little bit later. But that when you have this good credit, one of the benefits of it is it means that the creditors or anyone that we're anywhere where you are seeking funding are not afraid to work with you, and that oftentimes you do not have to show proof of funds. Come on. And then the more important thing, the empowering thing that you just said, that's why I just had to stop you for 1 second, is that you are in control. So it grants you freedom. There's a level of freedom that comes with having excellent credit, because then you can determine your terms. You have more power at the negotiating table. I want somebody to put that in there in the conversation. If I don't do it first. Okay. Look, have, need, want. I love that. Okay, continue. I'm sorry. Keep going.
That's okay. I love it. And so with that being said, like I said, you don't have to show a lot of times proof of, funds or anything, because they know that you're going to pay, because they know that your credit score is very important to you. And, once they pull your credit, they're looking at your credit history, your payment history, how you use the credit that you have, how responsible you are. And what I like to tell people is that your credit report is actually your story. It's your story of how responsible you are. It tells when you pay a debt. It tells if you pay a debt. It tells when you don't pay a debt. Your credit report is actually your story. And the one thing that another mentor told me, she said that you want to write your own story. You want to be in control of your story. And when you have less than perfect credit, when you have questionable credit, you are actually giving that power to the creditors. You're giving that power to someone else. And a lot of times, the credit reports that I come across with, my folks that are in my program who have less than perfect credit or who have credit challenges, is that we find incorrect information on that credit report. And so with that being said, sometimes, like back in the day, folks would say, okay, well, it's on my credit report. It's going to come off. I don't know what to do. I don't know who to contact, because we think of the three credit reporting agencies, the big three, TransUnion, Experian, and Equifax. We think of them as agencies. And so the name that's given to them are the credit bureaus. They're not actually credit bureaus. When you think of the word bureau, you think of like the FBI, where it's like a government agency. And so actually what they are they're privately owned companies. They're companies that have presidents, CEOs, and they are companies that are in business to do what? Make money. The way that they make money is a lot of times keeping us in debt with negative credit. And the way that they do that is, when you have negative credit or you have bad credit, you're looking for a way out. You're looking for a painkiller for that pain. And so what do? They offer you that painkiller. They offer you debt relief. They offer you counseling and different products that they have, right? What are they doing? They're making money off of the situation that you're in. And not saying that it's not going to help you, but think about it this way. Can someone that is, and it's not the credit reporting agencies, it's not that they are reporting incorrect information. They are, quote unquote, reporting the information that they receive from your creditors, right? And so we can't place all of the blame on the credit reporting agencies, because what they are doing, or what they're supposed to be doing, is reporting the information that they receive from your creditors. But this is my thing. If it's one creditor, right, and they're reporting to all three of the credit reporting agencies, then all three of the credit reporting agencies should have the same exact information across your credit report. The errors come in when one or two of the agencies has something totally different for the same account. So how can you be reporting accurate information if it's different for the same account across your credit report? Really? And so we did not used to take time to look at our credit reports, because think about it. If you actually get your credit report in the mail, it's a lot of pages, front and back, tiny writing, mumbo jumbo. You don't know what it says. You really don't know what it means. And to be honest, they actually set it up that way so that you get tired, you get frustrated, and you push it to the side and say, you know what? I don't know what this is saying. I'll deal with it later. I know that I owe Comcast. I know that I owe Verizon. And in 7 years, I'll check it again when it should be gone. And you check it, and what? It's not gone. Because they have done something else that was kind kind of in their legal right to do, but what you have to understand as a consumer is that you have legal rights as well. And so just because it's on your credit report does not mean that it has to stay on your credit report. You do have laws that are in effect to assist you with having this information updated, verified, or removed.
Okay. Okay. So you just said a lot, but let me take a step back right quick.
Okay.
What is the range of a credit score?
So your credit score, your FICO score, which is the credit model that is used throughout the industry, your credit score is from 300 to 850. Of course, 300 being the lowest,
Right.
850 being the best.
Okay. And so what's the difference between a FICO score and then what you may see from an Experian or not, I'm sorry, from like a Credit Karma or something like that? Is there a difference there?
There is. And so the FICO credit score is trademark. FICO itself is trademark, and it was created by the Fair Isaac Corporation, right? Fair Isaac Company. And so they have a patent on the credit score on that model, right? Now there's different versions. You may see FICO 8, FICO 2, FICO 10. There's different versions, but they have a patent on it. Anyone that uses that scoring model, because they were around so long by themselves, whereas though they had the monopoly. And so it became the industry standard. That's what your credit was based against, right? Okay. And any company that uses your FICO score, they have purchased a license, right? And so they're able to give you your actual FICO score because they're actually able to pull from the Fair Isaac Company, and they have a license to do so. So the big three credit reporting agencies, TransUnion, Experian, and Equifax, they said that's not fair. And so what they did is they developed their own scoring model based off of the FICO scoring model. So the FICO scoring model has 5 elements that make up your credit score, and it's patent.
Okay.
So what they did is, because they couldn't take the exact scoring model, so what they did is they took the 5 elements and they added one. So they added an element that is not recognized by FICO.
Okay.
If you credit for that, it's not recognized by FICO. So that's where the difference comes in. So you'll see on Credit Karma, they may tell you that your score is a 650. And then when you actually go and pull your credit, you have a credit pull done for a car or for a credit card or for anything, they'll come back and say you were denied. Your score might be a 580. And it's like, but on Credit Karma, it told me it was, I was a 640 or whatever, or 600. But on here, it's 580. And the reason being is because Vantage is what they had. They had the Vantage scoring system. So Vantage gives you credit for 6 elements, whereas though FICO only gives you credit for 5.
Okay.
So that additional element that the Vantage scoring system is giving you is not recognized by FICO, and they don't give you points for that.
And so is it that most lenders use the FICO?
The industry itself. There are very few companies or organizations that use the Vantage scoring system. Okay. Everybody, for the most part, uses FICO.
Ah, okay. And so,
I'm sorry. No, what I like to say is, like, with those agencies, with those apps and things like that, like with Credit Karma, Credit Assessment, everything that gives you, your free credit score, they're actually giving you your FICO score, and it'll tell you what scoring model they're using in small print. It'll say
Okay.
Vantage Score 3.0 or FICO or what have you, so that you know what you're actually getting. But the reason why they're able to give it to you for free is because if you look at Credit Karma, it's known as an affiliate company, a clickbait. Whereas though they'll tell you, you may qualify for this credit card, you may qualify for this loan, you may qualify for this. Click and see. So every time you click, they get paid per click. And then if you actually get approved for the item through their company, then they get paid for that as well.
I did not know that.
They make it free. It's because you click and they get paid.
Okay.
And so that's why they have so many advertisements. And if you notice, they never say that you will be approved. They say you may be approved. You may qualify. Click and see.
Okay. Okay. All right. So 300 to 850. So where do we want to be? I mean, I guess we want to be at 850, but what is a good range if someone needs to repair? What is the minimum top level number score that they want to have?
The minimum good credit score you want to be is what? The 700 club. Okay. The 700 club is where you want to be, because that's kind of like the sweet spot. So you can start getting approved for things with a 620 credit score, 640 credit score, and things like that. But you might not have the best interest rate. You may not have, the best credit limit, but you will definitely get approved. And you can get approved for things that are lower, but the interest rate is going to be horrible. So you want the best minimum credit score of a 700.
Okay, so somebody put that in there. You all may have already known this, but I'm just saying there's somebody here who doesn't know that. So put join the 700 club. Okay. Okay. Now, I think you mentioned this before, but what are some of the factors that help us? How do I want to say this? That will help. Can you tell me the 5 factors that the FICO score looks at? And then we'll go from there.
Yeah. So they look at your payment history, which is the biggest, because they want to know how you pay. That's 35% of your credit score. And then they look at, the length of credit the length of time that you've had your credit. And so anything, they want, 7-10 years. The longer you've had your credit
established,
is the better. Even if it's bad credit.
Okay.
Even if it's bad credit, but if you the first date that you have for established credit is what they want to see, how long you've had your credit. They don't want to see a 1 year credit. You just started 1 year and you may have a $10,000 credit limit and you may have never been late, but you're still considered a newbie.
Wow. Okay.
So they want to look at your length of credit. They want to also look at your types of credit. They want you to have a healthy mix of credit. And so with that, that's an installment loan, which is like a car loan or a mortgage, right? They also want you to have a mortgage as well, right? That's a good mix. And then they want to see your revolving credit as well. And so the difference between, a revolving is like your credit cards. And so the difference between an installment account and a revolving account is that the installment, it is the same every month. It's stability. The revolving is like your credit cards, whereas though every month your minimum payment fluctuates because it depends on how you use the card, right? And so then they also want to see your debt, your usage of that card. If you stay under the 30% of the revolving credit, right? And then they want to see your inquiries. So let me make sure that's 5. It's the payment history, it's the length of history, it is the types, it is the usage, and it is your inquiries. And the inquiries are the least. They only make up 10%. So you want to get rid of the inquiries. You don't want to have a lot of inquiries. Actually, people that have excellent credit, they only have like maybe 1 to 2 inquiries a year.
Wow. Okay.
Okay.
Wow. Now, do you know the percentages of the other ones? If you don't, that's fine. I know you said 35% for payment history and 10% for inquiries.
35% for payment history, and I used to know it off.
Okay, that's fine.
And it's 30% for
length of time. Probably length of time.
Yeah, it's the length,
okay.
And then it's 15% for your usage, if I'm not mistaken, and then it's 10% for the types, and then it's 10% for the inquiries. But I'm gonna check to make sure.
Okay, that sounds right to me.
That's how it's broken down. So it's 35, 30, 15, 10, and 10.
Okay. So that's good. That's good. That's good. Now, look, everybody, I hope y'all are taking notes because, and here's what I want to say too. And I was going to ask Chanay about this later on, but I'm going to go ahead and ask her now to talk about this. You may be thinking, oh, well, I'm in the 700 club. Hey, I don't need to hear the Chanay. She sounds like she knows what she's talking about, but I don't really need to sit here and listen to her tonight. Look, I know you work with people who want to restore and repair, but you also work with people who want to build. Why is it important, even for a person who feels like, I got it, look, I already got it going on, I don't need this. What do they need to hear about this?
So the difference between restoring your credit and building your credit is that, for one thing, creditors like to see, they don't just like to see you removing the negative. They like to see how responsible you are with the positive as well. And so if you have old accounts that are like closed and things like that, they give you that history, but they like to see activity that's happening now. How responsible are you now? And not saying that you have to go out every year or, to go get a new piece of credit or a new loan or anything, but the credit that you have currently that is open, how responsible are you with that? And so with building credit, you want to still be able to go out and get the things that you need. If you need that home loan, if you need a brand new car, that's still building positive history, right? And so you want to be active with it, because guess what happens? If you have a nice size credit limit, like a $10,000 or $20,000 credit card, and you're sitting at a 700, but you never use that credit card because you don't want to mess up your credit. If you don't use it, you're going to lose it. They can either close down that account, or they can lower your credit limit. Because why? These companies are in business to make money. And if they're not making money off of you, then they're going to say, okay, goodbye. We don't need you. You're now a liability, not an asset. And so that will hurt you in the long run. Because why? If they lower your credit limit, now your debt to income ratio is going to change, and that can lower your credit score, right? If they shut down the account altogether, that's definitely going to lower your credit score, because now the total amount of available credit is gone, and then that history that you had with that credit card is now gone. So you want to be active at least every quarter with credit cards and things of that nature that you want to save. You want to actively use them at least every quarter, because if it's not any activity, then they're going to assume that, okay, well, you don't need our card, you don't need us, because you're not using us, you're not utilizing us. And so what I tell my clients is, every now and again, because some people like to pay off their balances every month and everything. What I tell my clients is, like, every 2 to 3 months or so, leave a small balance. Let them charge you just a few cents for finance charges, because you don't want to risk them lowering your credit, right? And what they'll do is sometimes they notify you, sometimes they don't. So like I had a client tell me that, he had a credit card and he used it, but then once he paid it off, he didn't use it for like maybe 8 months or 12 months or something like that. And then when he went to go use it, I want to say, and it wasn't like a high limit, like it was like maybe a $700, credit card, but he wanted to use it for something and he got declined because he's thinking, okay, I have $700 available. He got declined for something that was like $200. Why? Because they lowered his credit limit to $100. It lowered his credit score because now his available credit is gone.
Wow.
That the income ratio has now raised.
Right.
Because he didn't use it. So you want to constantly know what's going on with your credit, and you want to know if you need to build it, if you need to use it, because if not, you're going to lose it. So you definitely want to know, and you want to keep your credit file active.
Okay. That's a good point. So listen to that, everyone. You may already know this, and that's great. Even if you have excellent credit, you want to keep your credit file active. That is good so that your score does not reduce.
Yes.
Okay. And so if you have a home, even if you say you have a mortgage or a car payment or whatever, would that help keep it active if you're paying a mortgage?
Well, it keeps it active as far as.
But that's just a portion of it.
Right, because those are loans. So you're going to pay those off. If you miss a payment or you don't pay, then that's a whole nother default right there. Okay. But the revolving credit is where they can lower your credit limit. They can, get rid of it completely. Not the loans. Right. But revolving credit card and things like that. That's the one that you want to keep active, or at least on a quarterly basis.
Okay. All right. Now, I have so many questions in my head, and y'all have questions written down in notes. So I think I want to go this direction. Why is it important for someone to get help with credit restoration as opposed to trying to do it themselves? I have a 2-part question. So that's the first part. Okay. The second part is, was it not knocking this? Now, there are a lot of MLM companies that do credit restoration. What's the difference between maybe what you see from an MLM and what you do, or maybe like a private company? So that's 2 questions.
Yep. And so anybody can fix their credit, right? The information is out there. It's Googleable, if that's a word. If not, I just made it up. But you can find out any and everything you want to know on the World Wide Web, right? And I've had people that have had wonderful and tremendous success with fixing their own credit. What it does is it becomes time consuming because there are different timelines that you need to take into consideration. There are different laws that you need to know the ins and outs of and what they're actually saying, how they can help you, how they benefit you, right? And so at that point, it just becomes a factor of, can I really effectively do it? And do I really effectively know the process and the timeline that is, required in the legalities of it from my point, and also from the creditor's point, right? And so there are so many different laws that work in your favor, and not just like the 609 or anything like that has been spoken about so much. There are other ones that work in your favor as well. There's a process that needs to be taken into consideration when you are disputing your credit, because the steps that you want to take is not just going in and saying, this is not mine, or, remove this or whatever. There are different steps that you want to take to protect you. And so what I tell my clients also is, never do an online dispute like when you're in Credit Karma or anything like that. When you click that dispute now button, you're actually clicking away a lot of your rights that you have and not even realizing it, right? And so, because when they come back with, their response, some people may say, well, they came back with the response. I don't know what to say. I don't know what the next step is, unless you have fully trained for this, or you know what the next step is because you've actually studied it, right? And so when you work with a company, no matter how large or how small, or an individual that actually takes the time out because this is what they do, then they can direct you further. They know what to do. They know what's considered a stall tactic. They know how to get the correct responses, and how to get things done. As an individual, you may luck up and get some things removed, but then how do you handle a bankruptcy that has incorrect information? How do you handle a judgment, that has incorrect information? So there are a lot of things that an individual that specializes in credit repair, credit restoration can do, and know how to get around certain situations when they aren't answering your calls, when they aren't responding, to you. There are a lot of things that we actually know how to do, or know what's supposed to happen, and when it doesn't happen, how to then handle that situation, right? Because for me, it's a full-time job. So I left corporate America 2 years ago to pursue this full time, because that's my passion. And what I want to do also is I educate my clients, as well as repairing their credit or rebuilding their credit. I educate them because I don't want return clients. I want referral clients. So I don't want you to come back to me as a client. Now, I'm not saying that, when you go out, you might not, mess up down the road, but I'm going to give you the tools that you need, whereas though you should not. Hopefully you will not. But if you do, then you can definitely come back to me. But I want to educate folks so that they can maintain it and continue to move further ahead, than when they left me. Now, the other companies, the MLM companies and the larger companies, and even some individuals that have, grown their companies massively. What I like about my company and what I do is that I am customer service. I am the professional credit diva. I handle your disputes. I speak with my clients one-on-one. I do a monthly Zoom call with every client as a touch base to find out what's going on, what's happening. And when I do my 30-minute consultations, for folks that are looking for credit restoration, I do a 30-minute complimentary Zoom call. We go over everything that's on your credit report. I break it down to you. I let you know what it's actually saying about you, what it should be saying about you. We devise a game plan together, and then we move forward. Because although having not so perfect credit is becoming more of a talking feature, folks are, they're willing to share a little bit more about not having excellent credit. It's still a personal situation. And so I know that you want to put a name with a face, a name with a company. You don't just want to give your hard-earned dollars to anyone and not know that they're actually doing what they're supposed to be doing. So that's why I meet with my clients face-to-face via Zoom, so that they have that comfortability with me. I'm able to hold them accountable. I am customer service. And one of the largest MLM companies that I have worked with myself in the past, as a client and as an agent, what I'm going to say is that the techniques that they use are cookie cutter. And no one's situation is a cookie cutter situation. Every situation is differently. And so what I received from them were 3 letters to be sent to the 3 reporting credit bureaus, the credit reporting agencies. It was the same letter basically for all of the agencies. It was the same information. Nothing had changed. However, each credit report listed something different. And so every situation is not the same. And every month, time and time again, it was just the same letter over and over and over again. Just those 3 letters. And with me and my company, every situation is different. And so I send letters to the creditors. I send letters to the credit reporting agencies. I send letters where they need to go. And another large company, what they do is they may only dispute 3 accounts at a time on one credit report, and then the next credit report, and then the next credit report. I attack everything. And then what happens is the ones that, remain, then we go after that, and it's more detailed to get the results that I need. One client in 1 month, I sent like 17 letters because their situation required 17 letters. I send everything via trackable mail so that I know when they received it, when we should receive a response, and we're in not total control, but we at least know what the next step is, when we should be receiving information. And what I do for my clients is, although I create everything and I send it out, on their behalf, because they sign the legal document that gives me permission to do it on their behalf, I use their address as the return address so that the responses come back directly to them. They know what's happening, they know what's going on, and then they send the responses to me so that we're in the know. They know what's happening. There's no question about anything. And again, we do the monthly check-in meeting so that they know, what's going on, what their score is, what it's saying, what I need from them, what they need from me. And, kind of in a nutshell, I tell them, as long as you do what I tell you to do and you don't do what I tell you not to do, you'll be fine. But I am here for them if they have any questions, or anything like that, because it is a sticky situation. And it's like, once you start working on your credit, then it's like, okay, I need to know what's going on. I need it to happen. And so that's why I kind of make myself available to them, to walk them through this process so that they know I'm not going anywhere until I get you a 750. You're not going anywhere till I get you a 750. We're in this together. I'm able to hold you accountable, and I let them know, once you join my program, it's no longer your credit score, it's our credit score. I'm invested in you, and I want to see, you had that same look on your face that my dad did back in 2017 when I started.
Oh, that's so good. That's so good. I have a follow-up question for that. But before I do that, I want to ask you, why is it, this seems counterintuitive, I guess. Why is it worse, I don't know if that's the right word to say, to have no credit over having bad credit?
Because the reason why it is better to have bad credit than no credit is because I at least have a track record for you, right? So even if you have bad credit, I know that you start off paying your bills, and maybe after 6 months, a year, you might fall off and you may not pay that bill again. It's going to go into, default or what have you. At least I know that about you as a potential creditor. But if you don't have any credit, I don't know how you pay anything, if you pay anything. And so the analogy that I like to use for my clients is, think about it this way, because cash is not trackable. I can't track cash. So you can say, well, I pay, all of my bills on time. I just pay them in cash because I don't want that debt. But how do I know that? You can tell me anything. It's nothing written on paper that says that you do that. And so think of it this way. If you invite me to your home, right? And every time I come to your home, it's spotless. It's not a thing out of place. Everything is shining. It's bright. It's clean. It's spotless. I could say, well, Jocelyn really knows how to clean her house. Or I could say, I wonder if Jocelyn actually lives here and uses the stuff here, or if she just comes here when she invites me here because she wants me to think that she can take care of a house. But if I come to Jocelyn's house And one week I come and it's dishes in the sink, the living room is a mess, and the dining room table needs to be cleaned off. And then the next time I come and everything is spotless, I can say Jocelyn really knows how to clean, because I've seen it. I've seen her use her kitchen. I've seen her use her dining room. So I know that she knows how to use it and she knows how to clean. But if I come to your house and it's never a mess, I don't know if you actually know how to clean or if you actually use it at all. I don't have anything to measure it by. That's what using cash does, and that's what having no credit does. They don't have anything to measure you by. So I don't know.
Yeah, because I mean, I know that there are, financial gurus who really speak against having credit cards, period. Like that you should just be cash basis. And I know some people fear having credit because they may have messed up in the past.
Right.
Go on. What do you say to that?
The person that says live on cash is what? A what? Multi. So he can afford that.
Yeah.
He can afford that, right? But because he is in a position where as though he never needs credit. If he wants a Toyota Corolla, he doesn't have to go get a car loan, right? Because he can just take it and purchase it right out the back, and he has his Toyota Corolla. But if the average working person wants a Toyota Corolla, they can't just take their cash and go and purchase it. So it's different situations. It's different, circumstances. Because he has that cash that he can go and purchase whatever he wants. Not me.
Mm-hmm.
I need OPM, other people's money, to go and do that.
Mm-hmm.
There's nothing wrong with using other people's money. You just have to use it responsibly.
Yeah. Yeah.
Now, let me ask you this. One quick question.
Yeah.
One who says use cash only, when he's offering you those programs, is he taking cash or is he taking a card?
Oh my gosh, I didn't think about that. Because we know he's not going to turn away a card if somebody's going to pay the money. Oh, that is so, I didn't even think about that. Yeah.
Yeah. And it may be card, but it may not.
Yeah. Yeah.
Right?
Yeah. So if you have someone who is like, I really want to restore my credit, I'm ready to do that, and you look at their history and you see that there may be a history, they just need help, like they have just a history of slow pay or no pay. Mm-hmm. Do you, and then they want to, they want to increase their savings, they want to begin investing. Do you help them with that, or do you often, partner with a financial advisor to help them on that side of it? How do you work with that?
So what I do is first I let them know, because when they want to do so much, it's like focus on one thing, because if you want to do everything, then you're most likely not going to do anything, or you're not going to complete anything. So let's get the first thing done first. And then let's move forward to see where we are, what you need to do, and where you need to go. So if it's more important for them to do the investing versus fixing their credit, then I will refer them to someone that can help them and strategically show them what they need to do to invest. Because my job is not to steer you either way in either direction. My job really is to assist you in what it is that you want to do, what you're going to be fully committed to doing, right? Mm-hmm. And so even if it's my opinion that it's in your best interest to work with me first, I'm not going to say work with me. I'm going to say, what is it that you want to do? What can you fully commit to? And then if you need to come back to me because this is what you want to do, then I'm going to be here. And what I like about the fact that when I do the consultation and I show them what's actually on their credit report, some folks might not even need my services. Some folks may not need credit restoration. What they may need is just some information on how to spend differently, how to pay down some things, and then they can see their credit score, increase. Whereas though I'll instruct them on, this is what you need to do, this is what you need to do, this is what you need to do, and this is how you do it. Thank you so very much. I appreciated speaking with you. Some folks have very limited, whereas though it's not a lot that they need to do, so they may not need my services, but they may need my products. And so I have a do-it-yourself, kit that they can use. It comes with the instruction, and I will, they can purchase that from me. And then it also comes with me giving them, a 30 to 45-minute tutorial on what it needs to say and where they need to and how they need to do it. And then there are some folks that really, really need, my assistance, and we tackle everything, head on together, or the folks that really just need the DIY but don't want to do it, and then they become my clients. And so I love the fact that they're able to hear all of their options from me, and then how, let's see how you want to move along. How is it going to help you? How is it going to benefit you? Because ultimately, my wish for my clients, potential clients, previous clients, current clients, is for you to get what you need out of the situation. And like I said, I just want everyone to at least leave me a little more educated than when they, came into my presence. So that's my ultimate goal, because it's just like with anything, you can't really win at a game until you understand the rules of the game. Understand the rules of the game, then you can adapt it to how you need it in your life to make it work for you, and then you're able to prosper.
Oh, that's good. That's good. That's good. You said a handful. You said a lot there. So if you had to give a quick, here are the main steps. I'm not saying like all the details, because they would have to come work with you to do that or buy a product. If someone is like, okay, I really need to do this. I've listened to Chanay. I see the benefits. I need to get my credit straight. What would you say are like the top 3 steps or 5 steps or however many steps that they would need to do, even if they were working with you, but just like a summary?
So somebody asked me, what is one of the best ways, or how can they maintain excellent credit? The most important thing is, the first thing is get your credit report. And so the free one that you get from free annual credit report, they give you the credit report, but they don't give you your credit score. They don't give you your FICO score. And so you want to use a company that actually gives you your credit score, your FICO score, right? And any alerts as to anything that is happening with your credit. So the first thing is you need to know what's on your credit report. Some folks have not pulled their credit report in years, right? And so you don't know what you need to combat against, or what's working in your favor, what's working against you, if you don't know. Okay, so the first thing is get your credit report. You really should subscribe to a monthly credit reporting service so that you're always in the know of what's going on with your credit report. Okay. Secondly, you definitely need to pay your bills on time. You don't want to have any latenesses whatsoever, because 130-day late can affect you up to 9 months on your credit report negatively, and it can drop your score anywhere between 20 points to 100 points, right? Just 130-day lateness. And that's just on one account. You definitely don't want to have multiples. You definitely don't want to have it across the board. The third thing that you want to do, honestly, is if you don't understand what's on your credit report or what it is saying, then you want to seek advice or assistance from someone that does. And that way, at least they can give you the basics as to what's on your report, what your report is saying, what should be on your report, what should not be on, your report. And that way, at least you have a template kind of sort of what you need to, to know and to work with. And then, fourthly, if it is something negative on your report, or if your credit score is not where you need it to be or you want it to be, you want to take care of it immediately. Because like I tell my grandkids, you want to be ready. You don't want to have to get ready. Right? And so you don't want that, because so many people were not able to take care of the wonderful housing market during this horrible pandemic, or the loans that were available to various businesses due to the pandemic because of their credit score. So you want to be ready. You don't want to get ready. And then you don't want to have to rush, right? And so you don't want to be in a predicament where as though you have to move out or you have to get a car, but your credit report, your credit score is not supporting that. You want to fix your credit as soon as you realize that you need your credit fixed. You want to maintain that credit score so that you can use it. And like I tell folks, it's not if an emergency is going to happen, it's when an emergency is going to happen. And if you have the excellent credit or the good credit or that available credit limit to help sustain you when that emergency happens, that's wonderful. And it's not messing with your monthly bills or anything like that. It's not going to catastrophically, deter anything in your household. But if you don't have that available credit limit or that good credit or whatever to help you during that emergency, then it could definitely be disastrous with just your monthly day-to-day living. So you want to pull your credit report. You definitely want to know what's on it. You want to pay your bills on time, always, at least the minimum. You definitely want to speak to someone if you don't understand what's going on, and you want to fix your credit as soon as you realize that it needs fixing. Rather you hire someone, rather you do it yourself, but you definitely want to get at least a minimum of a 640. With a 640, like I said, you can still be approved for different things. The interest rate is not going to be the best, but at a minimum, you want a 700.
Okay, that is so good. I hope you all got that. Those four. Chanay did repeat them. I'm going to repeat them. Get your credit report. Know your credit score. Pay your bills on time. Seek advice or assistance on it if you don't understand something, and take care of anything that is an issue immediately. That is so good and makes so much sense. Now, let me ask you this. Would you handle, like, if someone had, I don't know if this is more of a financial advisor or a credit thing, like if someone has like defaulted student loans or things like that, like, because I know a lot of people say, and I'm bringing up student loans specifically because I know a lot of people, like I have had friends that are like, I'm not, they may pay their student loan, they pay the very minimum. They're like, I'm not thinking about paying off my student loan because, they'll be there when I die.
Yes. I tell you, those semesters are so expensive, Lord Jesus. So when it comes to the student loans, right? Because anything that is on your credit report, no matter what it is, if it contains errors, it can be disputed and it can be removed, right? No matter what it is. However, think about it like this. Like I tell my clients, like if you have a student loan and it has errors and like it has been removed for whatever reason, um, the mortgage lenders, if you ever want to go and purchase a home and if you get financed, through a federal agency or what have you, that student loan debt is going to come up. Right? It may not show on your consumer credit report, but those mortgage companies, honey, they pull reports from, like I think before you were born, like they got,
Right.
your credit report from like when you was in the mama's womb, okay? And so they get so much information. What I suggest for folks that, feel like your friend that is going to be there, I'm going to pay the minimum as long as it's reading positive. And if you only paying $10 a month, as long as you pay that $10 a month and it's reading positive, that is awesome. What you don't want it to do is you don't want it to go into default. So if you have, because then it becomes negative, right? And that's going to lower the score. And so you definitely want to get in front of someone with, the federal aid department or what have you, or whomever, is housing your loan to see what you can do as far as like a deferment or, some people, I had one girlfriend, she just goes to school. Like, honey, I don't know. She will be 60, 70 years old and she's still going to be in school, okay? Because that's her tactic. And I'm like, I'm not here to judge anything. I'm just here to make sure that, you have all greens, all positives on your credit report. And so when it does get to the point where as though it's like, been defaulted or anything like that, then you definitely want to get in front of someone where so you can possibly make a payment. And I know that, the president and those, they're working on something regarding like, your student loan debt and things like that. But until, that comes to fruition, you still need to take care of the here and now. So anything that you can do that is going to help to bring you out of default, then you definitely want to do it. And then we can work on possibly, hopefully getting, the negative remarks, removed or updated or something where as though it's reading, current and things like that. And you might want to negotiate also that, if I start to pay this and I pay this amount, or if I pay, this amount or what have you to bring me current, is it possible that you can then, mark, this amount, as, current and things like that, because I am in the process of purchasing a home. I am in the process of starting a business, and this is affecting me negatively, and you kind of pull on the heartstrings, of the folks and everything, and just, let them know the situation, whereas though that can possibly, work in your favor. But yeah, definitely what you want to do is either have it deferred or, make the payment arrangements, even if it's $2 a month, whereas though it's just going to read positive. Because that's just positive.
And I guess that would be the case with anything, right? Mm-hmm. I mean, because I guess for most creditors, it's like something is better than nothing.
Right.
And I know that a big thing is, and y'all hang on with us. This was going to be an hour, but it's over an hour. I'm for real. I'm about to finish in a second. But I know a lot of people have issues with like medical bills. I was trying to think of like things that really can hinder people and hurt people, is medical bills, student loans, and just things like that. And so even with the medical bill, it would be the same thing, is
only if.
Oh, okay, let me shut up. What?
The medical bills, if it goes to collections, then you definitely want to dispute it, right? And that is because a paid collection is the same as a collection. It does not do anything to raise your credit score.
Okay.
And that is because for an account to go to collections, the original creditor has not been able to collect from you for at least a minimum of 4 months, for at least a minimum of 120 days. And the creditors know that. And so when they see a collection account, even if it's paid, they know that you paid it after 120 days, right? And so that's not going to raise your score at all. It does not help you to raise your score at all. Secondly, if I have a medical bill, or if I had a Verizon bill, or if I had a Comcast bill and it goes to collections, why am I paying this third party that did not provide any service to me whatsoever
Mm-hmm.
month?
Mm-hmm.
So what happens is the original creditor was made whole by their insurance company, right? Because
Okay.
they
Mm-hmm.
weren't able to collect from you. So what they did is, when now what some companies are doing, they're getting savvy with it. They take it as a loss or they write it off. And now what they're doing is they're sending the client a tax form to say you have made a profit. And you
Oh,
claim this on
wow.
you,
Okay. Mm-hmm.
right? But once they aren't able to collect from you, they write it off. They go to the insurance company.
Mm-hmm.
The company makes them whole. And so now for them to sell that debt to an agency or to a collection person, because I could purchase old debt and sit out and type letters or call folks and collect on it, right?
Mm-hmm.
But for them to sell it to an individual or a company or whomever for pennies on the dollar, it doesn't matter to them. And they sell it for pennies on the dollar because they've already been paid for it, right?
Mm-hmm.
And so if I have a $500 debt with Comcast, the collection agency, 123 collection company, may have bought that debt for $5, right? And so what they're going to do is they're going to harass me and send me letters and say that, Comcast has forwarded your debt to me, so forth and so on, yada, yada, yada. Please pay the debt of $500, right? Now, around tax time and around the New Year's, you see a lot of debt collectors come out of the woodworks with stuff. Why? Because they know in the new year, people make a resolution. I'm going to get my credit straight. I'm going to do this. I'm going to do that.
Uh-huh.
Tax time, people say, what? When I get my taxes, I'm going to get my credit straight. I'm going to do this. I'm going to do that. They know the cycles, right? And so for them to send me a letter, and if I say, you know what, I'm going to go ahead and pay this debt. It's only $500. I got it. I'm going to take care of it, thinking I'm going to raise my credit score. They just made $495 for what? They did not provide me any Comcast services. They did not provide anything to me. Why should they get paid for something that they just purchased for $5, a piece of paper, right? And so what we do is we challenge it. And I need you to show me where Chanay Robinson signed an agreement with 123 Collections that
Wow.
I will pay you $500. That shows that you gave me any type of services for $500. If you can't do that, then you need to leave me alone and you need to remove this from my credit report. And so you might have to send letters like 2 or 3 times or what have you, but it can be removed because you did not have a contract with me. I had a contract with Comcast. And so what they'll do sometimes is they'll send you the documents that you may have signed from Comcast. That's not what I asked you. I asked you to send me something that has my signature from 123 Collections and Chanay Robinson. If you cannot do that, please stop harassing me, because I know my rights. Leave me alone. And that's why you never want to acknowledge a call from a debt collector, because if
Wow.
they have you saying hello and yes, you are now in a verbal contract with them, and you in fact do owe them $500.
Wow. That was an education right there. I mean, I that was good. I hope y'all got that. I hope y'all got that.
Yeah, we never want to pay collections. Now, if you wanted to go back to Comcast, then what you need to do is call Comcast and you need to set up a payment with Comcast. And I guarantee you it's not going to be the original $500 because they've been made whole. It may be a $100 reconnect fee, a $50 reconnect fee, or what have you. It's not going to be the total amount that they said that you owed previously, because they have already been made whole for that debt.
Wow. Wow. That's good. That's good. Whoa, this has been so good. I wanted to ask you one more question.
Ask me. Come on. Bring it on. Bring it on.
And it is around, and you really said this, like, and you mentioned this to me in a conversation, like,
Okay.
now that you know to do better, how do you stay doing better? And then
Go ahead.
And then, okay, so 2 questions, and I'm gonna ask you to punch out an answer as quick as you can. And then the second one was, how can you set your children up to really understand good credit and how they can even begin to build at a young age? So those 2, if you can punch those out for me,
Awesome.
I'll leave it at that.
Awesome. So how now that you know better, you can do better. It's your responsibility to do better because you actually know it, right? And so, like I said, excellent credit is not just a one and done thing. It is a lifestyle. It is a mindset. And so you always want to be thinking around the fact of how is this going to affect my credit score? How is this going to affect, my cost of living or my change of living? Because think about it like this: your credit score dictates where you live, your credit score dictates what you drive, your credit score dictates what you wear, what you eat, it dictates where you work at some point, right? In some instances. And so you want to be mindful and you want to be critical of your credit score. Your credit score is one of the most important numbers in your life, just like your social security number, right? And it's unique to you. So when somebody asks you, can you co-sign for me? Can you do this for me? Now that you know how important it is, and the fact that they need a co-signer is because they were reckless with their own credit, right? You wanna be mindful of who you allow into your credit score, because you may say, okay, but I'm gonna sign for this, but you gonna pay the bill, you gonna do this. But when you sign for it, regardless of who pays for it, it becomes yours. It automatically becomes yours, right? And so you can't go to the loan company or the credit card company and say, well, I just signed for them because they said they were going to pay it. Well, when you signed for it, you said you would be responsible as well, right? And so you want to be careful and mindful of who you loan your credit score out to, right? And you always want to think of that. And when somebody asks you now, see, I didn't realize the importance of it growing up when I would ask my friend, well, can you get this in your name? Or can I use your name for this or whatever? You're my girlfriend. You're supposed to do that, right? But now that I know when somebody comes and say, well, can you sign for this for me or whatever? Well, why? What's going on with your credit score? Because you were reckless with your credit score. What makes you think that you're not going to be reckless with my own, right? So your mindset definitely changes because this is so important. It dictates a lot of things. It dictates every aspect of your life. And what you want to do for your children now is once you become responsible and you maintain that level of responsibility for yourself, then you can have it where so your children can benefit from that. And they can be put on your credit cards, your loans, and things like that, and they can reap the benefits because your credit score or your good credit history now becomes theirs. Because just like when someone, you co-sign for someone and you're giving them your credit score, you're giving them your good rating, you're doing the same for your children, but in a positive way. So just because you give them that credit, that credit score, you put them on that credit card, they don't have to physically have a card, right? You don't have to give them a card. You're just loaning them your credit score to help them to build that positive credit history so that when they graduate high school, when they graduate college, they have what they need to be set up already, right? And believe it or not, but you can put your children, some companies have an age limit as to, how old the person has to be an authorized user. But as long as a person has a social security number, for the most part, they can become an authorized user. And so when you set them up, the earlier you set them up, then the earlier you're giving them that credit history. So just imagine if you put your child on that's 10 years old. When they graduate high school at 18, they already have 8 years of positive credit history, right? And so then they're able to get what they need. And if you maintain an excellent or exceptional credit score, then they're going to maintain it. So there was one instance where it was a bank manager. She had excellent credit, and she put her daughter on her card in her car loan and one of her credit cards when her daughter was like maybe, I want to say like 15 years old. So when she graduated high school, the mother said, come with me. They live in Atlanta. And she took her to one of like the fanciest high rises in Atlanta. And the daughter was like, well, what are we doing here? What are we doing here? And she was like, just come on. So she had her daughter to fill out a rental application. And the daughter was like, well, why? Are you putting me out? Like, I just graduated high school. Like, what's going on? And she said, just fill out the application and everything. And she was like, but Ma, I don't have a job. I don't have anything. She filled out the application. When they took the application and they ran it, they came back and they asked the daughter, they said, when do you want to move in? And she was like, huh? She was like, when do you want to move in? And she was like, but I don't have a job. I didn't show you any pay stubs. You have an 820 credit score. When do you want to move in? And right then and there, she understood the importance of having excellent credit. You write your own ticket. And so what you want to do is you want to include your children in when you're paying a bill. Because they automatically think money grows on trees, or mommy just has to put that magic card into the machine and money comes out. You need to understand the full process of what's happening, because eventually one day this is going to be your process. And so as parents, a lot of times we tend to not hide the situations from them or whatever, but we don't include them because they're not paying the bills, they're not doing anything, but situations can change. So like my son, I want it better for my son. He's 14 years old. He is actually living in North Dakota with my brother because Baltimore has become just like the OK Corral to a degree. And so I wanted him to experience something more. So he was 13 when he went in July. He turned 14 in September. And so up there, it's just a different way. It's peaceful. So my brother, who is 33, has no children. None of my brothers actually have children. But he went up there like 6 years ago because he was just tired of Baltimore. He wasn't making any money. He, was like, I'm not selling drugs. I'm not doing that, but I have to do something. He went to North Dakota. He actually is the general manager of a Papa John's, making about, I want to say like $95,000 to $97,000 a year and everything, right? It's a slower pace of life, but it's just so much more peaceful. And then he had other relatives, other cousins that, followed him up there and everything, and they love it. It's cold as crap, but they love it. And so I wanted different for my son. And I asked him, we talked about it for a year, and my brother was in a position to have my son to come with him. And so he went last July, and my brother was in a 1-bedroom apartment. It was $850. So then they moved to a new development, and it was $1,250. So my brother's rent went up $400 because they went from a 1-bedroom to a 2-bedroom. My son started working at the Papa John's where his uncle is the general manager. He's 14 years old. He makes $11 an hour. He gets paid every 2 weeks. And one of his responsibilities is, since my brother's rent went up $400, I pay $300. My son pays $100. My son now has his he has his permit, and we actually purchased him a car for Christmas. So now we got all the work done on it. It's going to be shipped up there to him. So now he has car insurance. He doesn't have car payment, but he has gas. He has maintenance. So you can't say just because they are, kids or teenagers or whatever, they're not going to have responsibilities. Every situation is different. And the sooner you set them up to let them know that it is different and that they have to take care of themselves and how to be responsible, then the better it is for them. You understand what I'm saying? And so that's just like your child, when they start having to clean their room, eventually they're going to have to clean the house. When they start having to wash their dish, eventually they're going to have to clean the kitchen. So you want to prepare them and, let them know that the real world is on the other side of this threshold living here with mommy and daddy. So you definitely want to include them. You want to have those credit talks with them. You want to have those money talks with them. and stress to them the importance of how important credit is and money management is and mindset is now, especially now that you know and you understand how important these things are.
Ooh, that is so good. I just would never have thought about. I mean, that's just a nugget in and of itself is adding. I mean, I mean, I don't have kids, but I guess I just never thought
Mhm.
about adding someone. Because when I think about adding someone, I'm thinking you don't need a credit card right now. That's what I'm thinking. But they don't really even have to have it. It's just it's about building that credit. And I never would have thought about it for that reason. You know,
Mhm.
to help them to begin to build credit history.
Yep.
That is so good. Man, this has been awesome. You are just chock full of information and strategies. And I know I have learned a lot, and I am sure the people that are watching have learned a lot. And thank you so much. Thank you so much. Okay, before we close, look, how can people get in touch with you? How can they hire you? How can they work with you? Do you have anything special going on? Tell the people.
Yes. So, like I said, I offer 30-minute complimentary consultation to any and everyone. And the only thing you have to do is just send a text with your first name and the words complimentary consultation to 443-973-7555. Again, the number to text your first name and the words complimentary consultation are 443-973-7555. You can also check me out on my website. There's a scheduling link for 30-minute consultation right there. And my website is theprofessionalcreditdiva.com. If you want to send me an email, you can reach out to me at info@professionalcreditdiva.com. I'm on all social media platforms as Professional Credit Diva. My Facebook is, it's Professional Credit Diva all across all social medias, all across everything. And again, like I said, Diva for me means doing it very aggressively. I'm actually going to be speaking at the Pink event. It is a virtual event that is happening the end of April. It's the 22nd through the 24th. And on the 24th, I will actually be on site at the location with the pop-up shop. And so if you want to come by, introduce yourself to me, I would love to socially distance, give you, some love, some credit love. If you want to purchase anything, I'm definitely here for that. Again, credit consultation, your first name to 443-973-7555. And April the 22nd through the 24th, I will be a speaker at the Pink event.
And where is the Pink event?
It is actually at the Marriott down by BWI, if I'm not mistaken.
But it's in Baltimore.
In Maryland.
In Maryland. Okay.
That's for the pop-up shop, but the event itself is virtual.
Okay.
It's virtual. And if you Google the Pink event, the information will pop up.
Okay, awesome. Well, I hope everybody got the information. It'll be in the comment section on how to reach Chanay. Chanay, thank you so much. Okay, but before we go, look, I've been saying that for 30 minutes now. Okay, real quick. I'm asking all my guests this: what are you reading right now, or is there a book that you recommend for people to read?
Honestly, the book that I have actually there, let me tell you, and I'm not much of a reader, but I love information. So the Audible has actually become my best friend.
Yeah.
And so Jamie, what is it? Jamie Karen
Lima, yes.
I actually have her book on Audible. I love it. Believe it. Is so wonderful. And what I love about it is that she's actually reading it herself. And so you feel the energy, you feel the positivity, you feel all of her personality come out in it. And I love it, love it, love it. It is actually for me a good listen, for others a wonderful read, but that's the book that I am actually finishing up, and it has definitely brought so many nuggets to my life and everything. And
Yeah.
during this time, especially as an entrepreneur, I actually remember seeing her on QVC as I
Yeah.
was like flipping through the channels.
Yeah.
And so it was that connection for me because I said, I remember seeing her and I know that, she was an average person. And for her to be able to sell her company, for what was it, $1.2 billion and everything, something that she started, in her living room, that perseverance and that believing in herself, even when she wasn't sure, it just gave
Yeah.
me that thought that I needed. So that's
Yeah.
my recommendation right now. Yes.
Yeah. If you don't know her, and I'll make sure that I put her name in the book title in the comment section. But she is the founder of It Cosmetics. So Sephora, Ulta, QVC. That's how I found out about it. I used to see her on QVC. Yeah, that's awesome. Okay, and you are my last guest for Women's History Month, the month of March. What woman, living or dead, would you love to spend time with, gleaning from, picking her brain? Who would that be?
Actually, honestly, right now, it would be former First Lady Michelle Obama. And the reason why I say that is because in Jamie's book, she had the opportunity, for her becoming tour. She took advantage of it when she was able to like go and meet Michelle Obama and everything and have the photo op with her. And she questioned, like, what can I say to her? We only have like a few seconds. What am I able to say to her? How am I able to make an impact to brighten up her day, to leave her with something? And that's what she was concerned about. And she said, as she walked to the former First Lady, that she actually spoke to her and said, there's this brightness, this glow, this light that you have about you. And she was like, here I am, so like anxious and like worried about what can I say to brighten her day. And she did that for
Wow.
me, not
Yeah.
even knowing that I really needed it or anything. And what I took from that, what I admire about that is that I love when the Obamas were in the White House because they were definitely, definitely, definitely a model of excellence. And Michelle herself is a model of excellence in her own right. Whereas though, she let her husband shine and do what he needed to do, but just her humility and just the person that she is shined automatically on her own. And the fact that it wasn't, even though it was about her, it wasn't about her. And so that kind of made me think, like, if she said that, to Jamie, did she say something to everyone that came up, to her? Was it her delivering to everyone, that came up to her and everything? And just to be able to sit and just have, like a one-on-one heart-to-heart with her, the First Lady that wears like J. Crew, something that I'm familiar with.
Right.
Just to be able to just kick it and have like a girlfriend's conversation with her would be awesome.
Yeah, that is awesome. Thank you for that. Thank you for both of those. Well, Chanay Robinson, it has just been a pleasure having the professional credit diva as a guest on Navigating Now. I'm telling you, you really gave it. You gave that information. I'm telling you. Look, people, if you're just seeing this, if you're just tuning in, I need for you to go back and listen to the whole thing and have your notebook and take some notes, okay? Because Chanay laid it down. Thank you so much for being a guest. I have enjoyed it. I have learned a lot. I appreciate you. And look, y'all, check her out. Do not let shame, fear, whatever you may be feeling, she is going to help you get that credit score and that credit where it needs to be. Yeah, and with that, that's a wrap. This is your girl, Jocelyn Harrison from Navigating Now. Peace. Have a great rest of the week. Blessings, everyone. Bye.
Bye, everybody.